Have you ever heard any of these quotes before? Buy low, sell high. Be fearful when others are greedy. Be greedy when others are fearful. The stock market is a graph of human emotion. Yet for some reason, with all of these wise sayings, it's oftentimes pretty difficult to make a buck in investing in the stock market, and sometimes folks think it's even difficult in real estate. But maybe it's not stocks or real estate that's the problem. Maybe it's us. So folks, grab a beer or a coffee, you'll never know what's inside, and buckle up so we can actually learn some real facts about how to make money. We'll start with these 4 things. 1, how to use 5 psychological tricks that the rich use to actually make money during a market crash. 2, how to safely get the money to invest during a crash. 3, what to invest in during a crash. And 4, I'll actually just take you behind the scenes and show you some trades that I'm executing, and they'll relate to the things we talk about in this video, so you'll actually see me put my money where my mouth is. Y'all think this 3D printer's doing a good job? Anyway, first psychological trick that I like to use. How many times have you heard that it's important to diversify? That if you're going to invest in stocks, you gotta make sure you have the right balance between stocks and bonds, and that you index this and index that, and you know what, don't try to pick stocks, just put your money over here because you're just too stupid to figure it out otherwise. Honestly, I hate hearing that stuff. I don't know about you, but I like knowing what my money's doing and being involved in my money. Like, to me, it's not extra work. It's something that I can look forward to, is working with my money. Obviously, on red days, it's kind of like, cheers, folks. But, generally, I like to be involved. And so one big principle that helped me make a lot of money was realizing that there are really 3 markets that you can invest in. See, I personally pick stocks, and I don't like picking more than 20 stocks, which I've talked about before in this video over here. A lot of people would say that's not diversified enough, that's stupid, you're too heavy on certain stocks, whatever. So instead, I go put my money into another market, like real estate. I think y'all know I'm a real estate broker, I'm a real estate investor, and I make a lot of money from real estate. Well, the interesting thing is they tend to have different market cycles. And I never encourage you to time the market, but what I do encourage you to do is think, wait a minute, if I've got some money in real estate and some money in stocks, and they have different market cycles, that means I kind of hit bottom at different points, which really opens up some opportunities for you to make money. And that's exactly what we're gonna go deep on today. Think back to 2018. Real estate took a big dive in the summer of 2018. We've since recovered, but we had a big hit in the summer of 2018. Stocks took 6 months to follow. In 2005, real estate started losing value in November. And it wasn't until almost 3 years later, September of 2008, that stocks started tumbling. Well, the same thing might be true now, or whenever you're watching this video, in whatever market crash or red day period we're in. Real estate and stocks don't perfectly align. And the beautiful thing about that is, if I'm making big money in real estate, which I'm always hunting for really good deals, and I'm showing you how to get those sweet, sweet deals in my courses linked below, I could take gains from real estate and go buy stocks when they're on sale, like now. And so to me, one of the best forms of diversifying is not diversifying within a specific market. Like, I don't invest outside of my 30-minute rule in real estate. So I stick to my locale for real estate. That's where I'm an expert. That's where I get my deals. I stick to my favorite stocks because those are the stocks I know, and I'm not about to pretend that I read 50 different stock market reports on a bunch of different companies and then pick the best ones like everybody says you should do, but instead it's more fun to just grab a drink of coffee. Then you even have a third marketplace, and that's the market for gold. Now, I'm not the biggest fan of safe haven assets like gold, but gold is another one of those that when you look at the market, you kind of have stocks doing their thing, and then you have real estate on their cycle, and then you have gold on its cycle. And oftentimes when stocks are doing poorly, gold's doing great. And so having this sort of balance is an interesting way to be able to move money around and take advantage of big discounts. So one of the first things I want you to think of is how can you get yourself into not just one asset class? How can you get yourself diversified into different asset classes? That's what the wealthy do. That to me is psychological trick number one, making myself feel better about the market being down and all this fear and negativity in the marketplace trying to grab me by the neck. But then I can, no, it's okay. I'm in different markets. Just because one's having a bad day just means it's on sale to me. I'm still killing it in the other markets. Enter mind trick number two. You could do something like what billionaire hedge fund manager Ray Dalio did back in November, and I copied his move, but we'll keep this really simple here. Ray Dalio said, hey, you know what? The market's doing great. Let's just place a bet. We'll take a little bit of our profits, and we'll go ahead and place a bet that the market will be lower on March 20th, 2020. That's gonna cost us a little bit of our profits. If the market's still going up, no problem. We made our money back. We paid that premium, no problem. That little bit of cost goes away. We keep making money in the marketplace. If the market goes down, we just protected our portfolio for a very inexpensive cost by betting against the market. Now, guess what happens when the market falls? You start thinking to yourself, hey, look at this. Even though the market's going down, I'm still winning because I took a little bit of my portfolio and I basically bought an insurance policy in case the market would go down. And so now I'm winning even though the market's going down. The more the market goes down, the more I'm winning on that choice. And if the market goes up, no problem. I get to celebrate either way. So mind trick number two is using something known as a put option, which you could research, to protect your portfolio. So that way, instead of being sad that your portfolio is losing money, you're actually excited because your insurance policy is kicking in, and now it's like market goes up, you're winning. Market goes down, you're winning. And guess what generally happens when you're in a good mood and you're winning when the market's down? You get excited and you go on a shopping spree. Whereas most of the time, and I hate to say it, most of the time when the market's going down, we're sitting here like this. Market's down again. This sucks. I should probably buy more, but I'm just gonna wait until it's down 30%. Oh, and then I'll rebuy. I hate to say it, but sometimes when the market's red, I get this feeling like, oh, but what if it goes down more? Like, do I really want to buy? Like, what if it's not bottomed out yet? And then all of a sudden it turns green and it's too late, right? So if you go in with a good mood though, because you made this contrarian bet, now you're psychologically tricking yourself to be in a happy mood, and it's not even really a trick. I mean, you actually are making money, and now you actually go shopping for deals at the bottom. I feel like we're still at the beginning of the video, and so far we got two freaking awesome psychological tricks here. Diversifying your economies while not diversifying, and two, making contrarian bets. Poof! What's next? Let's get into it. See, I don't know if you know this about me, but on my channel, I'm all about practical advice. I don't like opening up a textbook for you. Oh, you should have a 3 to 6 month emergency fund. Oh, you should have a 3 to 6 month emergency fund. No. Psychological trick number 3. Let's say you have $5,000 that you want to get invested into the market. Yeah, we're gonna put the money into the market, but we gotta wait for the bottom. Here's a better idea rather than waiting for the bottom, and this is just something that I do. And maybe it's stupid. I don't know. Sometimes I feel like I do things that aren't super brilliant, but I try to do the best, okay? The best I can. So the trick is you take that $5,000 and rather than saying, okay, I've got my $5,000 ready to invest, and then you're looking at the market every day, and it's like, okay, let's put it to today. No, let's wait until tomorrow. Oh, let's just wait until next week. And then all of a sudden everything's green again and you kind of never invest that $5,000. Here's, in my opinion, a better trick. Invest $1,000 of it today. Go ahead, use the link down below, open up a Webull account. Now you're automatically gonna get 2 free stocks, which is awesome. A lot of people are getting the stocks valued around $20, but I've had some people get stocks worth like $200. Webull says you get a stock up to $1,400, so I'm like, you haven't gotten your 2 free stocks yet, you might as well. And use just $1,000 to get in the market today. Then, when the next trading day comes around, if it's red again, invest another $1,000. If it's red the next day, invest the other $1,000. And now, incrementally place your $1,000 into the marketplace. Why? Why would you do this? Here's why. If let's say you have $5,000 to invest now and you put it all in and the market goes down, you're gonna feel like crap. You're gonna feel like you made a bad decision. That's gonna jade you against making future stock purchases. You're gonna tell yourself, man, I knew I should have waited. And that's really bad. Now, if you put $1,000 in and the market goes down more tomorrow and you put another $1,000 in, you're not really feeling bad about your first 1,000 because your second 1,000 locked in those lower prices. And if it happens again, perfect. Lock in another lower $1,000. Now, if the market goes up though, at least you've bought 3 days in a row, and if the market's up, great. Cheer about the money you're making on your first incremental purchases, and then you can decide whether you want to invest the rest. But the psychology of making incremental purchases in stocks is so much better than marrying yourself to the price of you making a big $50,000 investment and being stuck to this number. Make these little incremental purchases and you'll sort of break the emotion that goes along with the stock market. In fact, one of the big things that I talk about in my program about money, wealth, happiness, and credit, which is totally different from the real estate programs, this is really for everybody, and stocks, is using psychology to help us build wealth. To basically trick our mind and reprogram how we're thinking about money and life and happiness and organization to actually make more money. I can't believe you're still here. Like, I feel like I'm just babbling, but I appreciate you still being here. So the next psychological trick that I like to use, investing in dividend stocks on red days. See, here's the cool thing about dividend stocks. When companies say they're gonna issue a dividend, they say they're gonna issue a certain amount of money as sort of cash back to the investors. They don't actually say they're gonna return a certain percentage, which, bottom line, look what happened to a company like Carnival Cruise Lines. A month ago, their stock was giving you a 5% dividend yield, which means if you invested $1,000 a month ago, you would make $50 per year on the $1,000 you put into Carnival Cruise Lines. Plus, obviously, any kind of fluctuation in the actual stock's price. Well, now, because the stock had a massive, massive haircut in value, that is, the stock fell like 25%, now if you invest $1,000 into Carnival Cruise Lines, you'll get almost $63 on every $1,000 you invest with them, which I'm not suggesting you should 100% invest in Carnival Cruise Lines, but you can now look at companies like AT&T, Target, and Carnival Cruise Lines a little bit differently, even Home Depot, all stocks that have gone down recently because now all of a sudden the amount of dividend that you're actually getting is higher per dollar you're investing. So one of my favorite things that I like doing when the market falls is picking up dividend stocks because I feel like you're locking in this higher yield. That is, of course, if you hold for the long term and we're not considering fluctuations in the market. Trick number 5. I've talked about this one before, but I have a little modification for you. What you want to do is you force yourself to buy stocks every single week. I've said in previous videos you force yourself to buy stocks every single Friday, but I want to modify this. Your goal should be to look at the market every day, Monday, Tuesday, Wednesday, Thursday, Friday. If any specific day is red, buy. If Friday comes around and there has not been a red day, fine, then buy on Friday. But every single week, I want to see you take a little bit of money from your paycheck and force yourself to make a purchase. Now remember, today's Friday, which means at the end of this video, I'm gonna buy some stuff. Even if the market value goes down afterwards, I buy, because I'm all about buying every single week. This is not only going to help you stay in tune with the market, but it's gonna trick you into focusing on what matters most, red days. And if the red days don't come around, you're actually still tricking yourself into focusing on what really matters most, which is getting into the market, into something you believe in, like the US economy. All right, let's get Thor's hammer here and have a little conversation about how to actually grind and get the money. So first things first, when it comes to investing in stocks, I never encourage you to use margin. Margin is dangerous because if for whatever reason the market crashes really hard, well, basically your broker could sell your shares automatically for you. I don't like that because that means you're selling at bottom, and I don't like anybody selling my stuff. So my favorite way to get the money is using something known as credit lines. I personally like to use credit lines to be able to buy stocks and to buy real estate because I'm using what's pretty cheap money, usually costs me somewhere around 5.5% on like a home equity line of credit or whatever. And I'm using that money to go buy stocks that are now on a discounted sale. But the danger is banks can actually come in and do something known as freeze your credit lines. That is, unless you already took the money out. If you took the money out and bought some stocks at a discount, they can't freeze your credit line anymore. And the cool thing about credit lines, whether they're business lines of credit or home equity lines of credit, is generally you get to pay these loans back over 10 to 20, sometimes even 30 years. So you're not talking about short-term margin debt, which you see a lot of in the stock market. Yet, guess what that might mean for a lot of you? That might mean that you ought to go out there and find yourself finally a good wedge deal, like a below market real estate deal. I can't preach that enough on this channel. Go buy real estate below market value. The biggest reason is not only when you buy a wedge deal can you get rid of stupid things like mortgage insurance, you could literally buy a house with 3% down and get rid of your mortgage insurance pretty dang fast, but you open up the door to a sweet, sweet home equity line of credit, which means you're only paying interest when you actually write the check and you go buy stocks or you go buy some more real estate or whatever it is you want to do. Now, obviously, some more basic recommendations would be things like make sure you pay off high interest rate debt like credit cards or sometimes student loans or car loans. Another thing I could say is get out there and go make some more money. But let's be real here. When the market's crashing, you want to be prepared to buy. And so even if you can't buy in this crash because maybe you didn't save up money or you don't have a credit line, think to yourself, how are you going to get a credit line moving forward? And ideally not a credit line that's related to stocks. You ideally want a credit line either related to your business or real estate. Which I guess that brings up what we should be investing in during a market crash. Well, generally, I recommend you continue to invest within those three markets the way you have been. For me, I invest somewhere around 80% of my money into real estate because that's where I know I can buy properties below market value. I just went through a whole story with you about how I bought a hoarding house over $150,000 below market value. These deals exist in every single market. The second thing is, if you haven't exposed yourself to gold yet, gold might be something that you would consider as sort of a safe haven. I personally would rather see you put $1,000 into real estate, gold, and stocks, one into each sort of economy, so to speak, than put $3,000 into a dumb emergency fund. After all, the money that I have in my investments is an emergency fund for me, except it's an emergency fund that actually grows. So for gold, we've got gold. For real estate, we've got wedge deals, buying below market real estate. With stocks, we've got two real options for things that we want to invest in while the market's crashing. Number one, you could do the really, really easy thing and pick yourself up a total stock market index fund. Not the most exciting thing, but this is the one that I recommend for you, and it's not the one you're thinking of. Probably not. Because everybody's always like, oh yeah, I'll get the Vanguard index fund. No. You gotta get the Fidelity Index Fund. It goes by the acronym FSKAX, and the fees to invest in that fund are way lower than Vanguard. A lot of stocks that people are jumping on right now are stocks like Uber, which just recently had a huge haircut, Carnival Cruise Lines, a huge reduction in price, and a sweet, sweet dividend. Or you can even look into 3M as possibly like a safe haven. 3M is a company that has like 95,000 employees, and they happen to, in part, because they're a conglomerate, they make so many different things, They make respirators and face masks, which if something like a virus is going around causing issues in the marketplace, buying a company that makes masks might not be a terrible idea. My rule, however, is to always invest in things that I believe in. And now let's jump on over to share my screen and just basically show you some of the stuff that I'm gonna buy right now with you. Let's just get right into it. All right, my friends, this is the Chase You Invest platform. Let's go ahead and place some orders to make some purchases. We've got some cash to deploy. We've got a red day. I've already been buying this week, but I wanna buy a little bit more right now. So I don't know if I wanna blow all of the cash I have today, but let's go ahead and make some moves. I'm thinking let's go ahead and grab 20 shares of Apple right now. That's about 5,200 bucks. I've always been excited by Apple, so we're gonna go ahead and execute that. That's done. Let's go grab a little bit more Tesla, just a dollar cost average down. We're at 644 right now, down 5%. Perfect. Let's go ahead and get, you know what, let's get 10 more shares of Tesla. We'll go ahead and execute that trade. Okay. So we've got Apple, we've got Target, we've got some big tech out of the way. I'm gonna go buy some Disney as well here. Let's buy 50 shares of Disney. That's pretty good. Let's put that order in right away as well. And let's shop for, let's see, what do we wanna shop for now? I wanna pick up a little bit of Dividend stock cheap, so let's go ahead and grab some Target. Not the biggest Dividend stock, you know, I could go for some more AT&T, I could go for Carnival, but I'm a little bit more enthused for growth for Target over Carnival and AT&T, so I'm gonna go ahead and buy, let's do 40 shares of them. That's good, yeah, I like that. And then let's also jump over and get a little bit of gold, except we're gonna do iShares, which is IAU. They're less expensive than GLD in case you ever wanted to buy them. This is, and that is their fees for investing in them. Let's see, gold, how many shares of gold do we want? Let's just go let's get about $3,000 of gold. It's not much, it's a little bit, just adds a little bit of diversity to the portfolio and gets us in sort of that other economy, especially in a turbulent market. Which realize that I am totally okay executing these trades, knowing there's a good chance with the way the market is right now, prices will continue to go down, but I'll just keep buying. Because I'm looking at making these purchases for the long run. Now go get your 2 free stocks at Webull. And so there you go, you've watched me trade. Make sure to come around tomorrow for a big announcement for my courses. So the video I post tomorrow, really big announcement. I think y'all are gonna love it. Also, if you're on the fence as to whether or not you wanna join, I encourage you to join today. We'll see you around. Thanks so much.